Fox News alert: Israel is under attack from Iran after taking out their nuke sites and top military leaders.
Tracking the markets after stocks sinking after Israel's strike on Iran. We're seeing Dow right now down about 600 points there in the red. We're also
markets are certainly panicking currently, and are you? Well, in this video we're going to be going over my prediction for this next week. There is of course a lot of volatility priced into the market currently, and it's very hard to call, but if we do look at the indicators, what can we really understand? And if we look back at previous wars, what can we learn from that? So I'm not a war expert, of course, not like how everyone suddenly is when something like this happens, but I will be going over, in my opinion, what exactly I think will happen next week. So I'm not a financial advisor, none of this is financial advice, but let's get straight into the video. So are you worried currently about the war and your portfolio? Well, if we do look back to previous results here, looking at 2003, we had the historic Iraq war, pre-war, late 2002 marked out here. We can see that there was a lot of volatility for its time, of course. The market trended downwards due to the fear and uncertainty. Post-invasion, March 20th, we saw the rally of the market officially begin. The market officially bottomed out and started to rally, so we could potentially see that, but of course we're not specifically seeing US involvement, so it's hard to say that this isn't really a war for the US markets to be considered. Obviously they're involved as a third-party proxy, but it will be fundamental to see how the US get involved with this to see where exactly the markets do move next week. And of course, I'm not a war expert. People that are supposedly war experts now that things like this happen are lying. So it's really hard to say where this is going to go. So the S&P gained 12% over the following 3 months from this war officially beginning. So the lesson learned from this is markets often fear in a lot of volatility ahead of the event, but once the event is resolved or has some sort of clear path, then the markets do like to become, well, they like to rally up, as we can see following the Iraq war. So now looking at the time of 2022, well, around this time we saw the Russian invasion of Ukraine, and this sent the market into a downward spiral. So markets dropped in early February due to the rising tensions, of course. Days of the invasion had a huge spike on the VIX, but market rebounded within a few days. So this was in February 2022, for those who don't know when exactly they're looking here. So we saw a large V shape. We saw the market start to rally. Oil spiked from $90 all the way up to $130 temporarily, so that could be a good place to hedge your money, especially if you're dealing with Middle Eastern countries, but this is not financial advice. The S&P recovered by 11% in the next following months, but obviously from then it did fall back off. So obviously that is quite a large scale conflict, and it is still ongoing. It does definitely need to come to a stop, but it doesn't really have much effect on the market anymore. But what can we really learn from this initial period? Well, initial sell-offs are sharp, but the volatility fades very quickly unless the war causes long-term economic disruption, which in fairness the Ukraine war definitely has done. Will this Israeli war? Possibly not for the US. It's hard to say. I think Israel probably has the majority of this undercover. Currently, they're doing relatively well at managing their resources, so I doubt the US will get involved. But again, I'm no war expert. I am very impartial to all of these geopolitics. So this is all it's all opinions based to an extent, but it's also facts based, because we really need to be watching what the US are doing in this time, because if they want to get involved heavily and stop becoming a proxy and a third party, then we're obviously going to see the markets start to dip quite heavily, and that's something in which we will see over the next couple of days to potential weeks, and if that does happen, it could definitely get very volatile. So next week, what will cause the market volatility to increase? Well, the market hates uncertainty for sure. A war involving Iran and Israel could drag other nations or global disruption. Basically, energy flows will start to struggle because of this and its implications, especially if Hezbollah or the Houthis escalate alongside Iran. That could definitely cause a lot of issues and potentially that's a hard word to say for me some reason, lead towards for the US to get involved directly, as they might see one of their allies struggling, which of course would be really negative for the market. That's not what you want to be seeing. Sectors which will be affected will be risk sentiments such as tech. This growth will definitely come to a stall essentially, as investment will likely fade. Defensive sectors like utilities, consumer staples and gold may rise, so that could be a good place to hedge your bets. And if you do think this is going to continue for a while, in my opinion, I kind of struggle to see this going on for a while. So we've seen this happen before with these two countries, and it's something in which previously was solved within a day or two, maybe even a week. But I think the stakes are a bit higher this time with what exactly the Israelis are targeting. It's something that the West is very keen to stop Iran having, and I don't think that they will actually stop until they have fully, taken out that process. So we're currently seeing oil on the rise. It closed yesterday at 73, with it closing the day before at 68. So there's been a relatively strong increase of around 12 to 13% for oil. So why? Well, Iran is a major oil producer, and military activity that threatens the supply of oil will obviously send oil prices shooting up. So who could be the potential winners of this? Well, it could be XLE. Oh, I'm not even typing it in the right place, but it could be XLE, where we could see the energy sector basically ramp up. Oil producers such as XOM, which is going to see a massive amount of rise in its stock price, of course, coming from this. You have stocks such as CV sorry, I'm really struggling to type today. Again, I've only just woken up. It's 5 in the morning. You'll have to forgive me. But this will most likely see increase if this volatility continues as well. And SLB, another one in which could definitely see some gains. I'm not going to do a deep analysis on all of these stocks because it is so hard to say where this is going to head in the next coming days, let alone weeks. So it's up to you to make your own decisions with these, but they are potential stocks in which could see gains. And on these gains, there's obviously some stocks in which are going to be losing from this. So the losing industries will be airlines, transportation, and any industry which is sensitive to energy costs. But I don't think it will be as drastic as what we saw when Russia had their, in 2022, because I don't think the West specifically relies on Iran too heavily, but of course it always will have a knock-on effect. So we can expect gold and bonds to have a rally as well, of course, because traditional safe haven assets are obviously what people seek in times like these, if they are expecting this to go on for a long term. But if we do look here, it actually hasn't gone on, it hasn't risen that much, indicating that people might actually not be seeing too much of a long-term effect within this at the moment. And if we do look at the VIX here, we can see that this has risen up to a close of 21.6, and you don't see this closing below 20 under this precedent. So there's clearly a lot of volatility priced into the market. And if we do look at gold as well, we can see that this has risen yesterday. It started its day off at around 3,382, and it closed the day at 3,400 and what looks to be 33. So there is definitely a lot of fear within the market at the moment, and that is something in which will drive either a decline or a lot of FOMO next week. But if we do look at the Fear and Greed Index, according to CNN, this is currently priced in at 60, indicating that we are actually in greed. I don't think that's actually massively accurate, to be honest. I reckon we're more towards the 30 level as of a daily basis, but this is going off of like a exponential trend line in a way, so it's not subjective to a massive amount of change daily. But in my opinion, we're definitely seeing a lot of fear at the moment, but that could also lead to a lot of FOMO. What people don't really do is they don't really tend to see these as buying opportunities, and it's fair to say that they could be right. This could definitely go a lot further down from here. In my opinion, I reckon we're going to see the market move a bit sideways next week. But actually, that's even hard to say that, because if this suddenly gets resolved, the markets could suddenly pump. If something more happens, if this escalates, the markets are definitely going to drop. It's hard to make a prediction on these sorts of things. All I can do is look at the indicators, but in this sense, I think that is completely pointless. If I look at the indicators, we're just going to see that they might say, oh, we're in a fair value gap, we might actually go up. That obviously isn't a fair value gap, but we're going to see the markets be very volatile next week. And if you are not very subject to a lot of volatility, you're not a big fan, then it might be time to get out. But I think the majority of people looking at this are actually still holding, but that was a big sell-off yesterday, of course, with a sell-off of minus 1.1% within the markets yesterday. Well, the S&P, it's fair to say, I cannot get rid of this indicator now. It's fair to say that there is a lot of volatility that we can expect to happen in the next coming days. So if we do look at the indicators, we can see that we are still in a long position on my MACD, which accounts for RSI volume, and it does look to be still relatively bullish. Okay, I lied with that. Actually is a fair value gap according to this indicator, but I can't really say, oh wow, we've just barely touched it, we're going to shoot up. The indicator says that, but the news may say otherwise. So when you look at broad markets like this, it's really hard to say exactly where we can expect that to go. Furthermore, if we are looking at the exponential moving averages, we can see that we are well above all of them, indicating there is a lot of support under this recent rally. However, how long that will last for, it could definitely come to an end, but I personally don't think that we will see it come to an end. I still think this rally is well and truly on, even though I am worried because Schiller's PE is 37, so the markets are at PE of 37, which indicates massively overvalued. CEO confidence is at an all-time low since the 1970s. Earnings are just nowhere near where they should be, so there's a lot to be saying that this market does not look to be as if it should be rallying right now. But when you do look at how many stocks are in the American market are currently at an all-time or a 52-week high, what do you think it is? If you watch my previous video, you will know. Well, is it 10? Is it 20? Is it 50% after we've seen this massive rally? Well, actually, it's around 8.7%. So there's not a lot of stocks currently in which are at 52-week highs. So there's definitely a chance for the markets to continue to rally despite there being a lot of headwinds against it currently with the Schiller's PE. Things in which should really push it back aren't having that much effect anymore, but that's primarily due to the fact that people have a lot of FOMO at the moment, which could be a negative thing for the long term over the next coming months. And there is, of course, the fact that a lot of people that invest these days don't really understand it. They kind of think, oh, well, if we look here, the market topped off at 6,140. So if I buy in now, it's got to get to there eventually, which isn't wrong. It's not wrong at all. But when you do look at the broad picture of the macros, interest rates and stuff, the US market's not in a comfortable position right now. It's a third of where it should be, essentially, on a health score, and it's really going to struggle to push past these levels intrinsically. However, because of the FOMO, because of where the markets actually want to head, I think it's fair to say that this rally will continue if this war stabilizes, but that again is so speculative. But I think if it doesn't exactly solve itself, I think that we will catch up next week, even within the next couple of days, to this 20-day EMA here. We might see the markets fall down to the 5,900 level over the next coming open market days. But again, that is not financial advice. This is all pure speculation, because I'm not able to tell you the future. So I think it's time to look at some potential growers, not just showers, for next week. And one of them is actually Tesla. So if we look on an hour chart for Tesla, Tesla has a lot going for it currently. It's above all of its EMAs. And if we go back to a day chart, it's actually seeing quite a lot of volume. So yesterday it was actually up around 4 to 5%, which was incredible. So it's fallen into this fair value gap, but of course it's within its other fair value gaps, its negative fair value gap. So it's going to intrinsically struggle, I think, but it really depends. I think the market is actually on the side of Tesla at the moment. We're going to see it potentially climb up from here. If we do actually look at a price target for Tesla, we can see that it is now subjectively overvalued by 5%. So its growth yesterday, and there is a potential high of 53% and a low of 64. For me, Tesla looks massively overvalued. I am in it a bit, not massively, because I am taking a bit of this momentum from its bottom, of course, but I'm not going to say that I'm going to hold this for months and months, because I don't believe in the company that much. I still think it's an amazing company. Don't get me wrong, all you Tesla bots, because you lot do exist and you are weird, commenting, oh my god, you're a clown, you don't like Tesla. Well, get a grip, mate. Find a hobby, because Tesla is an amazing company, but you can't just meat ride this one company. You know, it's a bit weird. Now, I'm sure I'm going to get a lot of dislikes for that, because some people are crazy, but so that's Tesla. I do think there's a lot of upside in the coming months for Tesla. I think it could potentially rise back up to, well, its previous all-time highs, to be fair, but I am a bit concerned about Tesla. So let's have a look at the big dog NVDA. Well, this has a potential average upside of 20%, as we can see here, and a potential near 50% upside with a downside of 30%, which I think is kind of outrageous. So we're seeing that this stock looks to be as if it's just going to rally from here. It might meet up with this fair value gap in the coming days, especially as the volatility increases. But from there, it will most likely rocket up. It's fair to say that this company is amazing. It's always going to be amazing. And when NVIDIA is trading at less than a 50 PE, I think it's just an absolute steal of a stock. So looking at the finance stock here, SOFI, the fintech stock, we've seen this rally up last week and then fall straight back down, which is funny, because I made a video a couple of days ago where I said, wow, we're seeing SOFI actually have a serious breakout. And then I said, but realistically, it's probably going to fall. That's exactly what it did. Don't get me wrong. I don't want to see this stock fall. It's doing my head in now. I'm starting to lose faith in it, in a sense. Don't get me wrong, all the SoFi fanboys, because you're just as bad as the Tesla lot. I still think this is an amazing company, if not more so than Tesla. This is massively undervalued, in my opinion, but it's just really struggling to break out. This stock is super choppy. We've seen a head and shoulders here fall. Now we've seen a reverse head and shoulders, and it didn't break out. We've not seen it break out, and now we've had another shoulder. We've turned into some sort of weird alien, and it's fallen again. There is a potential for it to climb here, but I think with the volatility, it just won't. So could SoFi be dead? Very much potentially, but I do think there could still be a rally towards the mid to tail end of this year. I think it's well deserved for this company. It looks to be massively undervalued, and especially when you compare it to its peers such as Robinhood. This stock actually broke out, and it's actually gone sideways from there. This week's been a very much sideways week. So again, I am out of Robinhood now, and it looks to be as if it could have been the right decision, but we'll only know in a couple of weeks. So Novo Nordisk, one of my favorite and biggest holdings at the moment, is actually seeing somewhat of a rally. It saw a bit of a pullback yesterday because of the news, of course, but I still think it's got the momentum behind it. It's kind of looking as if the fair value gaps on a day chart aren't really doing too much for the current time period. If we do look at the 200 EMA, which I cannot do right now, there we go. We can see that it is above all of them bar the 200 day, and I think when this finally does meet up, we will see this stock start to rally. Its next notable level of resistance is at $82, so it will definitely struggle to get past this. Or is that 80? Yeah, it's 82.5. So will it get past that? Hopefully, but I do think it might struggle, especially with this recent volatility. If we look at Eli Lilly, which is a very similar company, we've actually seen this close up yesterday, which was incredible. This stock actually has way more momentum behind it than Novo, but it does have way more what's the word, resistance when it does. So it's going to have a big level of resistance whenever it hits this line, potentially at the 880 mark. It really depends on the time frame, but it's going to struggle to break out of this regression pattern, and if it does, it could be absolutely huge. And I do think it will correlate very closely with Novo. Obviously these are very similar industries, which is not ideal for my diversification, not something which I recommend at all, but it could definitely be something in which could shoot up. Hims and Hers is just going sideways, and that's not necessarily a bad thing. I think that is actually a good thing. Long term, sideways action is actually really, really positive, as of course it means that you might actually see this breakout as all of the swing traders are now bored. For example, me, I'm bored of this, so I got out. But when it does go up, I will most likely be gaining some of that momentum again, because this is predicted to go quite high with a lot of individual analysts. And if we do look at the price targets, then on the mean it is overvalued, but on the max there's a 50% upside. So Apple, when I move my head, has actually fallen again late this week. It did see somewhat of a sideways week. It's such a boring company at this point. I don't know why anyone really holds it. They don't really do anything. Everything they do is just old tech rebranded. But after the China-US trade agreement, they really haven't even rallied, so it's fair to say this stock could actually be dead. It's probably a safe stock to be holding for sideways action. I don't see there being a big sell-off because a lot of Apple holders are very much long-term, but for me it's just a bit boring. And looking at AMD, well, this stock, it hit my level of resistance here perfectly and then died. It's a bit sad. It's a bit sad. Realistically, when it closed above the 120, 121 level, I really thought it would continue, and it did for a couple of days. And then it hit the next level of resistance, and it was like, peace out. No more of this. We had a good time. And it's a bit sad, really, because this company had the chance to absolutely shoot up. It still does, not realistically in the next couple of weeks, maybe the tail end of the week after the next, but wow, it's just a bit of a shame, really. It's looking to be as if when it finally does, it probably will hit this level and fall back down. But AMD, again, long term, a great investment. But for a momentum trade, it's so unpredictable, especially with this massive regression. So that has been this video. I hope you have enjoyed it. Do let me know in the comments if you liked this video, because I am really trying to learn what my audience and what the wider fintech and healthcare and tech stock audience really do enjoy. Do you like these sorts of videos? Because I would like to know where to improve. I'm really trying to make something of this channel now, so your feedback would be much appreciated. With that being said, none of this was financial advice at all. It is just my own opinion. You need to form your own opinion, and when you do invest, your capital will of course be at risk, so you do need to understand the risks behind this. So I hope you have enjoyed, and I will see you for the next video.